It's Monday, that means it's Setup Monday, and I'd be remiss if I didn't talk to you about BTC on this rainy day in Washington, D.C. First, we have to talk about the elephant in the room, which is the Dixie, the DXY. US dollar continues to decline, making multi-month lows, multi-year lows. This is a 2018 low it's tapping here. If Dixie DXY US dollar index continues to decline to 88, which it should because we're getting more and more money printing, more and more stimulus, more and more Fed buying equities, however you want to skin the cat. If Dixie continues to fall, BTC will easily continue to rise because people will look for alternative stores of value other than US dollars. That's just a fact. So let's talk about BTC. Because, oh man, technically we hit an all-time high on a few exchanges, which should get a ton of headlines. All-time highs are a blessing and a curse because you get a lot of headlines, you get a lot of new people coming in, you get a lot of FOMO, both institutional and otherwise. You get a lot of wrecked people who obviously buy the top, sell the bottom type situation. My view remains we will get a 30% pullback eventually. I don't know when, but I'll be there waiting for it. I think a lot of institutions are going to be there waiting for it too. People who have missed the boat. The 15% dip was bought extremely aggressively over the past few days. If you zoom in on these few candlesticks, it was tweezer bottom, dragonfly doji, Adam and Eve reversal, all on lower time frames. So that gives you a sentiment gauge. You know, we're getting reversal pattern after reversal pattern after a 15% pullback. So tons of people bought that dip, waiting to buy that dip. You don't see that on a bearish dip. You know, you don't see this 15% move and then reversal pattern after reversal pattern. A move like this was also highly correlated with options and futures rollover dates. So how that works is there's a set time period for the contract. The expiration date was on the 27th, typically leading into any expiration date the week of, usually a few days before the expiration. There is massive volatility. People are closing their contracts before expiry. They're rolling over to the next contract before expiry, or expiry hits, and there's just a ton of volume as the positions close. So I think that played a large part in the 15% pullback. We are hot on trend. We continue to be hot on trend. Just to give some gauge of that, if we look at trend metrics, this is just the 200-day moving average. We haven't actually hit the 200-day moving average on Stamp since March. The 200-day moving average is at 12K, 12.5, near the R1, 12.8. That's the lowest I expect any dip to ever get, if we get a dip that's that big. What I don't want to see is explosion off the 200 and then death to the 200. That's what you don't want to see. I don't think we will see that in this case because we've hovered around the 200 a few times here in May and September. So there's been mean reversion already. Typically we see mean reversion between 80 and 150 days between each other for BTC. So again, we're above the 200, we're hot, we're at 2 all-time highs, we're bear diving on everything. You know, it's hard to be massively bullish here just because how insanely bought this rally has been so far. We're at the median line of the pitchfork, which is another reason we may pause at around 20K. It's tough. It's a tough trade because we're at all-time highs, we're in price discovery, we're going to get headlines, we're going to get new people, we're going to get FOMO. At the same time, the amount of money that's going to take to hold us at these highs is a lot. It's a lot of money. So the amount of money we need to bring in is massive. And maybe the Dixie is enough. Maybe the death of the dollar is enough. But we're sort of at where we should be based on trend, based on the rate of change expectation. Another thing I'm watching is this 24K yearly pivot. 24K by end of year at this point is a very reasonable expectation. If we look at the 2016, 2017 trend, you can see how many times we hit the 200-day moving average. We only did not hit it towards the end of the trend when things went parabolic, basically. We tapped close to it a few times, but this was late stage. So I hope we're not late stage here. I hope we are early stage. You know, early stages, you're actually at the mean, you're tapping the mean, you're playing around with the mean, you're questioning what it means to be at the mean. You get these parabolic rises, drops. We really haven't gotten any massive news that would cause this, which is another thing. Not that I'm big on trading news, but all these dips were news-based. Bitfinex hacked, China bans Bitcoin, Coin ETF denied, Segwit 2x, Bcash. There are all sorts of reasons, right? Like for the catalyst. We haven't really had that yet. If we look at the daily cloud in 2016, 2017, we touched the cloud a couple times. We actually reset trend over and over and over. So we get a bull trend, reset, bull trend, reset, bull trend, reset, bull trend, reset. All of this was bullish TK recrosses above the cloud each time. That's what I'm referring to here. If you look at the weekly 20 SMA, massively just touched it, floated around it. We haven't touched it since September, similar to the 200-day moving average. Again, we avoided the 20 SMA late stage, so I hope we're not late stage here. The slower this goes, the better. The slower the grind, the better. Because otherwise it's going to pop and drop. And that's not sustainable. Obviously, that just leaves a bad taste in everybody's mouth. Just like 2019. We popped up, dropped down. I don't want to see that here. Here's the weekly cloud. Again, we tapped the Kijun multiple times-ish. We didn't actually touch it on the weekly, but we came fairly close on the wicks. You can see how far away we are here. Very far. I will say on candlesticks, if we exceed the previous week's wick on a candle weekly close, extremely bullish. Anytime you have a wick, one way or the other, and price exceeds that wick the next week in one direction or the other, that's the definition, or that's the sentiment is continuation, right? If we break below this wick this week, if we close below the last weekly wick to the downside, that's bearish reversal. If we close above it, it's bullish continuation. So here's the 4 hour, and that's really the most comfortable I'd personally be on a leveraged position, is watching the 4 hour, because with trend metrics, you have to curve fit it to see, okay, what is the speed of this trend? I don't care what your settings are on whichever indicator you're using. Pick the settings, don't change them, then curve fit it to how well the trend has fit so far. Maybe you're using MAs, maybe you're using who knows what. If you look at the 4 hour cloud, you can see how this has retested Kijun a couple times. It's bounced on this blue line, the Tenkin a couple times. It's reset. It's reset, which is huge. And now it's going for another attempt at trend continuation. So at this point, the 4 hour is telling you a long is good, go long, all the metrics look good. If anything, we're overbought from the Kijun here. You'd rather see this situation where you get this slow grind and things start to curl up. This is a difficult long entry because it's already so overbought from the Kijun, the red line. So again, it's tough. We're just so bullish. It's tough. And if you look at ETH really quick, very similar setups. I think end of year, if we hit 24K for BTC, I think 750, 850 is reasonable for ETH based on yearly pivots, based on the pitchfork here. This pitchfork looks really good. It's fit the rate of change fairly well. I especially like the price taps at the median line here. I like how it actually failed dramatically at the median line here. There's some weird rule with pitchforks where if it retests the median line and doesn't reach the other edge of the diag, it should fail to the other edge. I don't know. There's all sorts of weird pitchfork rules, but so this all looks good for up. Definitely. It's overbought right now for sure. If we zoom into higher time frames, or if we zoom into these candlesticks, it's overbought-ish. Not as much as BTC. It's bear diving, not as much as BTC. It technically didn't make a new high, so it technically didn't bear div yet, but you can see how this hit the Kijun and bounced. That's what you want to see. That's what I want to see for BTC. And it does this, ETH does this fairly frequently, but it's weird to see BTC in the massively overbought camp as opposed to ETH, because ETH loves to go just parabolic and no prisoners. But on trend, ETH is a more comfortable long because it isn't as overbought. It isn't as insanely parabolic. Then lastly, just looking at this weekly cloud on ETH, it is nearly out of the weekly cloud. It should be within the next couple weeks, and that is massively bullish for 2021. I say this a lot, but if this means ETH survived a bubble. It bubbled out, died, and then is going again for another bull run. So if ETH makes it out of the daily cloud or weekly cloud, which it will almost certainly over the next couple weeks, 2021 should be massively bullish for ETH. This says the trend has completely reset from 2018 and is bullish once again. So really the setups are just watch the Dixie, because you know what? If the Dixie goes to 0, then BTC should go to infinity and ETH will follow, because the institutional money is certainly looking at that and paying attention to that. And you can also use the Dixie as a gauge for other alternative assets, art, Pokemon cards, like anything weird and strange. I saw a racing pigeon get sold for 1.2 million USD a couple weeks ago. I mean, like, this stuff is just out of control, right? It's just everything bubble. People are looking for alternative stores of value, and for many, BTC is the one.